Hello everyone and welcome to the Bitcoin halving educational video or tutorial. My name is Jordan Kuzmanov. I'm the chief trader in the Traders Academy Club, and today I will do my best to walk you through this process. What does it mean? How does it affect the prices of Bitcoin? What we can expect and so on. Alright, let me just get rid of that and we can jump to it. Now, before we do, I would like to invite you guys to take a moment here and invite you to our live trading rooms inside the Traders Academy Club, where me and Vlad are going over the markets on daily basis, creating reports, plus amazing library and plenty of educational materials. By library, I mean not just videos or text, I also mean software that you can use. So again, just check it out and see if you like it. Plus the free Telegram channel, which we supply with plenty of free content there. Trade setups, educational materials. So feel free to join. You can find the link below in the comment section. Now, let's talk about Bitcoin halving. What is this mysterious thing? Well, it's not mysterious at all. This is how the whole ecosystem, the whole network, the whole idea of Bitcoin was designed since the very beginning, and that is to make scarcity and to control the supply by creating this halving process, which does a few things. Now, first of all, we should say that the halving is happening when we process 210,000 blocks. Right, so people are mining these coins, we're opening these blocks, and we produce coins. So with the current trades that these blocks are being produced, the Bitcoin halving is happening approximately every 4 years. Okay, so you can ignore this number, just remember that approximately every 4 years, like we have it here in the timeline, we are going to get these halvings. Now, the next very important keynote here is that the reward which the miners are getting for doing their job, right, for mining, for actual mining, every time the halving happens, this reward will be cut in half, which basically means if the current reward per block is 12 bitcoins, after the halving this reward will be cut in half. Okay, another very important part to understand the whole idea behind halving is that we currently have, not currently, there are 21 million bitcoins in total. In total, guys, there will be no more bitcoins, of course, unless they change something in their protocol, but so far this is the number. And once these coins are mined, that's it, game over. Okay, and at the moment 80% of that is already mined and circulating. Okay, people already use it or store it, but those coins are in someone's pocket somewhere. Alright, I hope this is more than clear at that stage. Now let's talk about the previous events and some projections. This table is clearly showing us that but at halving number 32, which we're probably not going to see at the year of 2140, all blocks will be mined, right? All coins will be now available. Until then, you can see retrospectively, probably here we can see it very nicely, what's happening. After each halving, the reward is dropping consistently, right? And more blocks are processed. So what would happen once all coins are mined. Think about that for a second, right? What do you think happens when all coins are mined? Now, before we get back to that, let's take a look at this image of this screenshot. Now, first of all, this is not my my doing. This is the source. I'm quoting these guys, of course, giving them all the credit. Fantastic job, guys. Thank you for that, but we're just going to use it to illustrate what's happening. Now, you can see that, first of all, these lines represent the halving in terms of time, right? We have this axis here showing us the time. And you can see after this halving process, what's happening to the price. Usually, that process is triggering a bullish market, right? And when you see it in, when you look at it, the bigger picture, we have these bullish markets probably most likely triggered, or one of the triggers is this halving event. Of course, this is not the bottom, because that would be technically our top, right, of this wave. Then we have a bottom, and then the price starts moving, and boom, we see these moves afterwards. So how exactly the halving relates to the technical analysis, I leave it to you to decide, because there could be many variations of this analysis and the conclusion that we can draw here. But we are looking at something very familiar happening at the moment, and currently we're somewhere around here, right? The next halving is in a few days, May 12th. So absolutely amazing in terms of opportunities, and also in terms of, if we can call that a fundamental analysis behind it, not technical. We know that in the upcoming, let's say, 2 years or so, we should be looking at bullish markets, right? Which is something really cool, because even if you're not just buying and holding it, and you're trading it intraday, all these moves to the upside, imagine what you can do on the 1 hour chart, 15-minute chart, 4-hour charts, right? Because this is weekly chart here. And what looks like 50 bars or 70 bars is actually a lot of bars on the lower time frames, which means plenty of opportunities, plenty of possible opportunities for us as intraday traders. Now, back to the question that was asked previously: what's the future of Bitcoin? What happens once everything is mined, right? And we more or less have 2 scenarios here to focus on. So scenario number 1, as mining doesn't reward you anymore, because once all the coins are mined, there is nothing left to be mined, right? So as mining doesn't reward you anymore, you abandon the network, the idea, and everything, and basically you stop supporting the entire project and you just leave Bitcoin alone. If that happens, the chances of Bitcoin surviving are slim, right? Because the ecosystem will not be supported by anyone, and this is the whole idea of decentralized ecosystem, where it's all peers of people that supports the network. And if we don't have that, there is no one to support this network to validate transactions and so on and so forth. This scenario is less likely to happen, at least in my opinion, but it is still on the table. We should be always looking at all possible scenarios. This is what trading is teaching us, right? It doesn't matter how crazy something looks like. If you're going to buy right here and everything is extremely bullish, if your strategy suggests that there must be a stop loss in place, and this is probably the best way to be trading, guys, right? You must have an exit plan exit strategy. So you say, okay, if this low is broken, I'm going to close my buys. So it doesn't matter how amazing this setup looks, we should place our stop loss in case, whatever the reason is, the price just boom drops, and instead of losing our entire account and balance, we're going to be risking a certain amount of money there. So I'm not the kind of person who is simply going to ignore something just because it doesn't look plausible at the moment. Now, the second scenario, again, might be more realistic here, but basically what it means is that once all the coins are available and there is no need for mining anymore, the people who are going to validate these transactions and basically support the whole network, okay, maintain the network, let's put it this way, they're going to be rewarded in terms of fees. So anytime you process a certain transaction, you validate this transaction, you get a small piece of the fee. And this is how you start making money. So interesting, really interesting what's going to happen. Unfortunately, we're probably not going to be around to see which scenario was true, but it is what it is, guys. Now, many people refer to Bitcoin as digital gold, and we're going to slightly touch some economical principles here. So if you're not familiar with economics, don't pull your hair yet. I'm also not an economist, guys, but it's really simple, all right? So I'm sure you're going to be understanding it. Now, as we said in the beginning, Bitcoin works very similar way as physical gold, and this is basically one of the reasons why many people refer to Bitcoin as digital gold. Okay, physical gold mining works, which is designed to keep the inflation rate stable and predictable. Now, neither gold nor Bitcoins are unlimited, right? We have a certain amount of gold on the planet Earth. Well, that's not really the planet, this is a planet, right? And we have some gold on it. Once this gold is mined, that's it, right? Basically, this is how it works. And same with Bitcoins. Once all 21 million coins are mined, game over, no more. So scarcity is probably going to create demand, meaning that once all coins are mined, some people are going to store them, which means not 21 million coins are going to be available to be freely traded. Even less coins are going to be freely traded. And I'm not sure if I'm explaining that correctly, but again, scarcity is usually creating demand, because if something is not on the market, it's hard to be found, right? And that creates this demand, which usually goes hand in hand with increase in prices. So imagine it's Thanksgiving, right? And you're looking for a turkey. It's, I don't know, 12 o'clock, 3 o'clock p.m. and you have people coming over for dinner, 15 people coming for dinner, guys, and you don't have a turkey, right? And you go to the store, and what are the chances of finding turkey at that moment? Most likely it's sold out, right? Scarcity. So you're willing to pay, instead of, I don't know, $1 for a turkey, you're willing to pay $5, $10, $20, $50 if you can afford it, which is 10, 20, 50 times more than the usual price, just in order to save the night. So it's really a game of supply and demand here. Now, in that table, you can see what usually happens. If we drop the line like this, we see that the less supply we have, the more demand we're going to have, and usually the prices are going to be higher. right? And as supply would be going higher, the demand will be going lower, because even one day after Thanksgivings, no one is going to look to purchase it anymore in the stores, right? So even if you have it in your store at that time, there will be no demand like it would be on the day before or 3 days before that. Very, very simple principles. Again, I'm not sure if I'm able to explain that clearly, but this graphic here should be helping you understand. The less supply that we have, the demand goes higher and the price goes higher. The more of the given good or service we have, right, the demand drops and usually the price is dropping with that. That's the basic idea. So if that's not clear enough, guys, please again leave comments below and we're gonna get to the bottom of it and make sure you understand it. All right, so both gold and Bitcoin are supposed to reach zero inflation at some point because they're deflationary currencies. It means, what does that mean? It means that the value of this is going to increase over time, because the more we are mining it, the more we are using it, the less of this supply, overall supply, the total supply we have left, right? So that means as inflation rate decreases, the prices for both should be going higher. And this is why I'm pretty sure many people, I'm not going to call names here or quote names, sorry, not call names, quote names, who are predicting that Bitcoin could be reaching 100K, it could be reaching 200K, it could be reaching $1 million, right? It could be really expensive currency at some point. Of course, they had issues which they're trying to solve, but this is not the purpose of this video. The purpose of this video is to understand what is halving and what could be causing to the prices. And I think those numbers at some point will become realistic. I'm not sure if and when that, not if, when that will be happening, like this kind of numbers. Okay, but it definitely makes sense, because when you think about all this logically, right, without being biased by any opinion here, just making our own conclusions, it really makes sense. I mean, we all know where gold started trading back in the days and where gold is now. So I'm not saying it's going to happen over 3-4 years or a decade, but definitely it has the potential to get there, right? So that's in terms of inflation, and you can see it here. This is the chart, how Bitcoin inflation rate in percentages, what's happening to that, going closer and closer to the zero line. Now, considering all these things, we need to ask ourselves the question, is it better to spend our Bitcoins or to store them? I mean, let's say you're a proud owner of one Bitcoin, and you know that in approximately 5 or 10 years or 20 years, this Bitcoin could be worth, I don't know, millions of dollars or euros. So your idea is, okay, I'm just going to put it in a vault and leave it for my kids or grandkids and just make sure they have fantastic lives without worrying about money ever again, right? All right, that's perfectly fine, but what if everyone does that? Then what happens? Because let's think about it, guys. I mean, if no one is really using that currency, it becomes useless, right? There will be no adoption, there will be no real use cases for that. Can you really maintain these amazing increases in price without any real value behind it? Because gold, I'm not sure if you know that, but gold is not just used as to store value, right? To put it in a vault that you can sell later on. But gold is also used in many production lines and many factories and mobile phones, etc., etc. So gold has real world value, and it's really used in our daily lives, right? Some people have golden teeth. I mean, the use cases for gold are limitless, and it's really specific commodity with very specific qualities. That's why it's valuable in many industries and widely used. So again, the question is, if we don't use our bitcoins, then what? Right? It totally becomes useless. So what's your plan here, guys? I'm really eager to hear what's your plan. Maybe you want to cut it in half and use some of it to support the network and make real world adoption, and go ahead and buy stuff from Amazon or some other store when they're offering crypto payments. Or you want to completely leave it in some dark corner and make sure it never leaves that place until it's super valuable, so you cash in. And the next question is, when exactly are you going to cash in this money, right? You have it and it's growing, and you know it's supposed to grow even more, right? So when exactly do you cash out your money and start spending it? I've been talking about this subject with my friends, and it's really tricky because you're like, okay, I want to spend it or I want to buy something, but then it feels like if you're not investing in something that will bring you money back, and you just go ahead and, I don't know, buy some expensive car, boat, you know, whatever, something which is taking money away, liability, then what, right? I don't know, it's too many variations. So looking forward to your comments below, and I hope we're going to start some interesting discussion on the subject. All right, guys, last slide. Of course, I thank you very much for your time. Again, invitation to check out the Traders Academy Club and to join our Telegram channel. This is the link again, but you'll find it below, so you can click on it. Wishing you a fantastic day or evening. Stay safe, and I'll see you in the next one.